What is going on, guys? Welcome back to Crypto Alt Delete, and we got a great crypto video here for you guys today. However, before we get into the video, I just want to say that I'm not a financial advisor and this is not financial advice. Do your own due diligence and research, and don't invest anything you're not willing to lose or cannot afford. With that said, let's get into the video. We're on coindesk.com today, and we're talking about crypto options traders are betting against market volatility. Now, given the absence of big news in August, selling volatility and taking a vacation for solid theta gains is the only thing I can do right now, one trader said. Crypto traders typically short volatility by selling or writing call or put options. So what's going on here? Well, there is a lot of market chatter right now about impending volatility explosions in Bitcoin. Still, some crypto traders retain a bias for shorting volatility that is setting up strategies that bet against price turbulence. By the way, if you're new to Crypto Alt Delete, hit the subscribe button down below, turn on that bell for all notifications, let us know in the comments if there is anything you want us to cover in the world of cryptocurrency news. Let's continue. Bitcoin, the leading cryptocurrency by market value, has primarily traded in the range of $29,000 to $30,000 since July the 24th. Now that's below $30,000 to $32,000, however, but that's from the preceding 4 weeks. But the cryptocurrency price hasn't risen more than 4% in a single day since June 21st. Now, as such, key metrics gauging Bitcoin's backward-looking realized volatility and estimated or implied volatility have tanked to multi-year lows. Now, this is because volatility is said to be mean-reverting, and because increased volatility boosts options prices, some market participants are anticipating sudden and notable price turbulence and are considering buying BTC call or put options, which offer protection against bullish or bearish moves to profit from the change. That's known as long volatility trade, okay? Others, including Greg Magadini, director of derivatives at Amber Data, suggests considering a short trade. He says upside volatility likely remains far away unless BTC can take new year-to-date heights. The clearest catalyst for this currently revolves around a BTC spot ETF. Magadani said in his latest market note, "I continue to believe the base case in this environment is to lean towards, the short void bias in the near term." Now, traders typically short volatility by selling or writing call or put options. Now, the strategy is preferred when realized and implied volatility metrics appear rich relative to their historical standards or lifetime averages. Now, there is a lack of catalysts for price moves, and implied volatility is greater than realized volatility. Currently, realized volatility, or RV, and implied volatility, or IV, are hovering at multi-year lows, which doesn't favor selling options or shortening volatility. However, the other two factors do. The initial optimism from the string of US spot ETF filings by the likes of BlackRock, Invesco, and others in mid-June has faded, and the Securities and Exchange Commission's final decision on the matter is months away. Bitcoin's 30-day options-based implied volatility stood at an annualized 29.5% of press time, with the realized volatility at 25%, according to Amber Data. The 7-day IV also traded at a premium to the equivalent of realized volatility. Now, these readings indicate near-term options aren't necessarily cheap. There's a lot of cost carry for long volatility players, assuming nothing happens until an ETF decision. Realized continues to be dismal as the spot trading in tight daily ranges, Magadini wrote. The fundamental catalyst for volatility, the ETF, is a ways away. Griffin Ardern, who's a volatility trader from the crypto asset management firm Biofin, expressed a similar view, saying that selling volatility is one of the few profitable trading strategies. The implied price moving range of the current 7-day average IV is about 4% for BTC. Still, the realized price moving range is less than 1% or even less than 0.5%, which means that selling volatility will have relatively good returns, although the current IVs are also at historically low levels, Ardern told CoinDesk. Given the absence of big news in August, selling volatility and taking a vacation for solid theta gains is the only thing I can do. Theta gains are equal to selling time for a short option seller. As time passes and expiration nears, the option becomes cheaper, yielding a profit for the option seller. Hedging risks. Shortening volatility or selling options is a risky business, and which can result in huge losses if the market moves suddenly. It requires an ample supply of capital and expertise. One way to mitigate the risk involved is to purchase out-of-the-money options if and when the market moves, Magadani said. Calls that strike prices above the underlying security's going market rate and puts below the going price are said to be out of the money and are popularly referred to as wings or tails. That's going to do it for this edition of Crypto Alt Delete. Like, comment, subscribe, share the video, and we'll see you in the next one.